going on, guys? Enhanced Market here. Going to make a video going over the best pattern to master in order to become very successful at trading and day trading. So my favorite single pattern to trade is the falling wedge. Falling wedge is a bullish pattern only, and it results in usually an explosive move to the upside. So if you can capture either a falling wedge once a week, a couple times a month, most of the times this will be a successful play. So what is a falling wedge? I pulled up this chart pattern sheet, very helpful tool. If you don't have this, you can either take a screenshot of the screen, or I have it in the Discord server, Bull Trades, if you want to take a peek. I'll put the link in the bio or description, and you could come join us. We do alerts and everything else that you could possibly want for a stock trading group. But back to the falling wedge, single best pattern. I'm going to go over a couple examples of how to spot it, what your price targets would be, etc. So falling wedge, a tighter move to the downside, creating this tight triangle to the downside results in an explosive move to the upside. So for an example, right now I'm on the 1 day time frame checking out this ticker big C, and as you could see, we are getting tighter and tighter, narrowing down. I can draw a line for you guys. So a line from here, as you could see, we have one touch, two touch, and then it breaks right there. And then on this side, support, we have one touch, two touch, and three touch. So in order for a falling wedge to be a pattern that I want to take a trade on, personally, I look for either an ABC correction or an ABCDE correction. If you don't know what that is, go take a look at my previous video on Elliott wave theory. It's just a simple correction pattern. So what I look for is a wave A, B, C, D, and E. And that is usually the time frame that it takes. That's usually what I look for. And then after wave E, it generally will break to the upside. So where would I enter on this play? Typically, I would like to enter over either a candle after a pullback. So this would be my first target or my first entry point. Right there. And if I entered here, my first target would be the top of wave D. So this would be my first target. And if you see, let's see how large of a move that was. So that was a 26% move in just a couple of days. So if you played options, that would be a massive winner. Now, typically, after it moves to the upside, breaks to the upside, a pullback has to occur. And how do you measure where it's going to pull back to? I take my fib retracement, and I will go from wave E to the top of that breakout move to the top, and generally it falls between the 0.5 and the 0.786. So for this example, it bounced exactly off the 0.618, which would be considered a wave 2 pullback, and now it's setting up for a wave 3 impulse wave higher. And if I wanted to play this again, I would wait for a break of this top candle. So I would enter right there, 96.66, and my target. How would I get my target? If you want to see a more in-depth video, take a look at the Elliott wave theory I posted the other day. I would take my fib extension from the bottom to the top and back down to wave 2, and my target would be the 1618. That would be my first target. So 136.58 would be my first target. It's a pretty large move. So definitely possible. Definitely see it happening. We'll see what happens. But that's how I would play the break, and that's how I would play the pullback. Let's take a look at another ticker. Blink. So I'm just going to go over an example that previously happened. As you can see, it's a little tough to see it on a daily chart. So I'm just going to zoom in, maybe a 2-hour chart. Let's see how it looks. So 2-hour chart looks decent. So falling wedge again. We have a large move to the upside, and then we have consolidation as it gets tighter. Draw some lines for you guys. So as you could see, nice pattern. We have 1 touch, 2 touch, 3 touch, and 4. And on the support side, we have 1 touch, 2 touch, 3 touch, and 4 and 5. So this would definitely be a playable falling wedge. And if I take my A, B, C, D, E, we have A, B, and C. So this one would be an ABC pattern. And how would I play this one? So for this one, as you can see, we broke out. And usually what happens is when we break out, sometimes we retest. And as you could see, this previous support right here, if I set a line, we held that previous support. So right here would be a great entry. I would play the break of this previous candle. So let's see, put my magnet on so we get an accurate line. So if I played the break of this candle at 25.15, entered right here, and if I played a weekly option, we would have had a move all the way up to around 27.82, which is a 10% move. So if you're playing options, this is a 1 day 10% move. That would be at least a 100% move on a weekly option. So as you could see, it's just a little move is all you need. And if you were playing a little bit longer term, we break out, we come back down, we retest that previous resistance, becoming new support, and we make a move higher, which the next target would be this candle right here. Why? So if we have the ABC pattern, let me redraw that for you. A, B, C. This is the next target, and I'll draw a line across for you guys. It touched that perfectly. So previous resistance is acting as resistance again. So this would be a great take profit place if you're playing a little bit a longer term option. And look, previous resistance becomes new support. So if you're playing again, and you see that this line's holding, this would be a great place to enter. And as you can see, this previous resistance breaks through, becomes new support, and moves higher to the upside. So I hope you guys are catching on. Previous resistance becomes new support always. It's a great way to play. And that falling wedge, if you played commons, this falling wedge led to a huge move to the upside. Let's measure that. So if you played this break of this candle, all the way up here, 122% move. Insane. So I hope you guys are starting to see what I see. Now let's move to the next ticker. Another example. Workhorse. So I hope just by looking at this chart, you can potentially see where a falling wedge would happen. Just looking at my eye, this looks like a bull flag, possibly a falling wedge. But this one, right over here, this looks like a very nice falling wedge. Now, let me take my lines, and I'll draw for you guys. As you can see, beautiful falling wedge. Fix that for you. I have the magnet on still. Take a look at that. That's a beautiful falling wedge. If I took my fib retracement as an extra source of security from the bottom to the top, right around that 618 level. Right between the 618 and the 786, so it's a great place to enter. And like I was saying before, I would play the break of the candle, the first candle that breaks out of the wedge. So if I entered at the break of this candle, I don't think I ever went over where my stop loss would be. My stop loss would be the lowest candle. So this would be a stop loss right here. And what I like to do is I like to wait for to see if the 1 hour candle closed below it. If the 1 hour candle closed below it, then I would take my loss. Just because it falls below for a second or two, that doesn't really consider it stopped out. You definitely want to give it some time because the fake out before the breakout happens, too many times. But if I entered right here at the break of this candle, we would have had a decent size move. We would have had a 6.5% move, which on an option would be great. If you were playing commons, your entry would be here, your stop loss would be here. So we had a nice move up, but then we pulled back, but you wouldn't sell because your stop loss wasn't hit yet. And as you could see, your first target would be that candle again. And then the next target would be the top of the falling wedge. And as you could see, it exploded to the upside. That easy. So the falling wedge happens very often on all time frames. Ideally, the larger the time frame, the better it's going to be. If I went to a 15-minute time frame, there's probably falling wedges everywhere. Just by taking a quick glance. If I were to draw something out for you, as you can see, I see a falling wedge kind of right here. This is on the 15-minute time frame. We have an A, B, C, and a break. And if I played the break of this top candle, you would have a nice move. Your first target would be the top of that falling wedge. You would have a nice move, pullback, retest of the breakout, and then a larger move to the upside. So you can play this on all time frames. I typically like to, keep my trades high quality and consistent. So I like to look at some larger time frames. If you guys have any questions, feel free to drop a comment below. Make sure you subscribe, like, and if you want to see anything else, if you have any concerns, questions, or topics that you want me to cover, feel free to comment. I'll see you guys next time.